Good morning and welcome to When Wall Street Meets Main Street. This is your host, Alan Blood. Glad to be here with you today, and I've got some great guests, so you're going to want to stay tuned for the next hour because there's some information that you need to know about how to deal with your real estate and a big issue that's facing a lot of families here in Utah. As we look at what's going on in the market today, we're seeing a little bit of a recovery. We had some better-than-expected economic releases today. The thing to keep in mind in this world right now is better than expected means that it's not absolutely terrible. It turns out that people are buying homes slightly faster than expected, inflation is slightly better than expected, and people are actually manufacturing goods here in the country to some degree. Well, that's all fantastic news when the expectation was that the world was falling apart. So we saw a little bit of a recovery in the market today. Interest rates are off just a little bit from where they've been. If you're in a position that you're trying to do some type of mortgage financing or you're doing something that's involving an interest decision, I would recommend you lock sooner rather than later right now. We're going to see interest rates continue to climb through the summer, particularly with the Federal Reserve pulling a lot of money off the table. They've been spending $85 billion a month for 2.5 years. We've talked about this a lot on the show. They've cut that back twice now. They're only spending a grand whopping total of $65 billion a month, which still seems like a lot of money to me. But it's having an impact on interest rates. So if you're in a situation where you're buying or you're refinancing, you really got to get moving on that sooner rather than later if you want to take advantage of where rates are right now, because they're definitely going to be going up. Today we're going to talk a little bit about the process of short sales. And if you own a home or you live in a home in a neighborhood, you know someone in the last 2 or 3 years who's gone through a short sale. There was a survey released today, Zillow, which is not really a great source of information in Utah, but it's helpful, I guess. Their estimate is that right now 1 in 5 homeowners are still underwater based on their valuations nationwide. And in Utah, it's a little bit better than that, but not too far off of that figure. I mean, that's heavily skewed when we deal with properties in Florida or California, the Sun Belt areas where people really just got crazy with their real estate. Values went up through the roof, and then they came right back down through the floor. And so they're a little bit harder hit than we've been here. But still, this is a problem that's faced a lot of our families here in Utah. And our neighbors and friends, and maybe yourself, you've dealt with this issue. And the real problem when it comes to dealing with what you do when you're underwater and you can't make your mortgage payment anymore is no one really knows where to turn. This is a confusing and a difficult process. And if you've tried to go through a short sale on either the buyer's side or the seller's side, you found out that it's not only confusing and difficult, but nobody seems to really have good answers as to what happens next, what the time frame's going to be, what you should expect. And so after years of hearing this, I found some great specialists who are here to talk about that with us today. Paola and Alisa here from Equity Real Estate. How are you folks today?
Good, Alan. Thank you for having us on the show today.
I'm so glad you could make it. I've been excited to talk about this for a couple of weeks because really this is an issue that a lot of people are dealing with still. And we've seen a decrease. I saw the stats yesterday that foreclosures are down year over year, that short sales are down year over year. But there's still a fairly prevalent piece of our real estate market. Right now, what do you think is the percentage of transactions that are a short sale or a lender-based transaction still?
Well, I would say one of the statistics is that foreclosure filings have gone down by 21% from January of last year to this year. So we're definitely seeing a recovery, but there's still a lot of foreclosure filings. Now, that doesn't mean that all of those homes are actual short sales. It just means that percentage of homeowners are going into foreclosure.
It's going that way. Well, I know at one point 45% of sales in Salt Lake County were foreclosures or short sales. Was about 3 years ago. And it seems like that's come off of that number now where it's sitting more around maybe 10 or 12%.
Yeah, that sounds about right.
But which is still more than double where it normally is. I mean, normally that number is like 3 or 4%, so I guess that's really triple what a stable market should be showing, which means we still have more people than should be in a normal market having to deal with this issue. So, in fact, let's just define this a little bit. I think a lot of people don't understand what is a short sale. What does that mean and how does that operate?
So a short sale is essentially when you're selling your property for less than what's owed. So as an example, if your property is worth $200,000, but you owe $250,000, then you'd be potentially selling your home as a short sale if you were interested in moving forward with selling your home versus letting it go to foreclosure.
Why is the bank going to do that? Why don't they just say, great, thank you for the home, get out?
Normally, they do get more money out of a short sale versus taking the property to foreclosure. It does cost them more money to go through the foreclosure process, and then also if they take on the property after the property has gone to foreclosure, then they need to take on the utility bills, possibly
homeowners association,
even
property taxes, all the responsibilities of ownership.
Yep, absolutely. So in general, they do normally get more out of a short sale versus foreclosure.
One of the things I've encountered on the lending side of this is that there's times where the banks seem to operate in a way that doesn't make sense to anyone but them, and I think that's true. You know, I've seen, and I'm sure you have too, situations where people had made offers on properties for short sale. The bank didn't take it. It went to foreclosure. They got less at foreclosure than they would have, and then they put it back out on the market and they listed it again later because they now own the property through the foreclosure and sold it for less than the short sale. But what I think a lot of people don't realize is that the banks are insured in various ways. And so sometimes when they go through that foreclosure process, they get insurance money that actually kicks back more to them than they would have through the short sale. So it's hard to know what to do and hard to navigate. And, you know, when you call the bank and you say, hey, I'm having a hard time making my payments, it's not like they're on your side. And even if they send you to the modification department or the short sale department, they're still not on your side. What are the challenges that you see people getting into when they're dealing with that? I mean, when somebody first gets to a point where they realize, okay, I can't continue to make my payment, I need to sell the home, and I can't sell it for what I owe, what steps should people be taking at that point?
Yeah, well, the first thing, and going back to the reason why some people, you put that example of they'll give them a higher offer than the bank actually gets once they take it to foreclosure. It's all about the bank's opinion of value. So if during the short sale process they did a market analysis or a broker's price opinion or an appraisal of the property and they have an unrealistic expectation of the value, they're not going to accept anything close to what really is market value.
Yeah.
So it just really comes down to choosing the right professional that knows how to deal with the bank, knows the game inside and out, and is going to advocate for you and is going to, go to bat for you when that value, because sometimes, it happens, the bank will go ahead and conduct some kind of appraisal or evaluation of the home, and if it's unrealistic and your agent can't sell, you can't get offers in at that, they need to be able to go to the bank and not be afraid of disputing that value.
And that's the tough part here. I mean, when you're communicating with these banks, it's such an unlevel playing field. They have all the information, and you have to jump through their hoops. And the most common thing that I hear, the complaint that I think we get from clients that are dealing with this on the finance side, is they call the bank and say, hey, I'm having a hard time making my payments, but I'm scraping it together, I'm barely making it, but we want to sell, but we're going to have to short sell. What do we do? And the first thing the bank says is, well, stop making your payment. What do you respond? How do you respond to that? What would you tell clients when they get that advice from the bank? Good idea, bad idea?
It depends. Because
I love that answer, by the way, because it's everything, isn't it?
And I'll give you both scenarios. It depends because, unfortunately, some banks, if the homeowners are current and they're making their payments, when it comes time to accept a short sale, they may accept the short sale, but they will, most of the time in those cases, either ask for a cash contribution at closing or ask them to sign a promissory note, which is basically an unsecured promise to pay. It doesn't report on your credit. And so it's kind of a tough thing because some people that have the ability to continue making their mortgage payments but depleting their savings are doing everything they can to do the right thing, then the bank just comes back and just stabs them in the back.
Yeah.
And then some banks, so it's really interesting because some banks will say, no, you have to make payments in order for us to continue reviewing you. Some will say, don't make your payments. But in the end, if a homeowner continues to make payments throughout the process, then they're more likely to be asked to come up with some kind of contribution.
That's so counterintuitively bizarre.
It is.
Well, you can make payments all the way through, so keep paying.
Exactly.
Something else that's interesting is FHA actually requires that the homeowner is at least 31 days delinquent in order for them to actually close on a short sale.
So that is a legitimate requirement, at least if you have an FHA property.
Correct.
Well, and I think one of the issues, and it's hard to think of the future when the present is so grim, and going through a short sale is no fun. I mean, that's an emotional process because if this is your home that you've been living in and raising your kids or being in with your family, and now you're having to walk away from it and all the time and effort and money spent to get the house and maintain the house and scrape through the tough times to get to this point, just walks away. And that's just emotionally jarring. So it's hard, I think, for people to go through and think, okay, well, this is what I'm dealing with now, but 3 years from now or 2 years from now, I'm going to be in a different situation. I may want to be able to buy a home again. And the challenge there is what you do when you're dealing with the short sale or going through this foreclosure process, which is terrible, really has an impact on what your ability is to do next. Mm-hmm. And so if you make the payments now, if you can, well, that's probably going to put you in a better position to be able to actually buy another home in the future. So there's a lot of moving parts here.
So I think it's important to just speak with an expert. If you're thinking, if the bank indicates that you need to be delinquent, go ahead and talk to an expert and ask that person, let that person know about your scenario, and that person can go ahead and give you some sound advice in terms of...
All right, well, we're going to come back after the break and talk about what that advice would be. Stay tuned here at K-Talk. Welcome back to When Wall Street Meets Main Street. I'm here talking with Paola Martinsen and Alisa Bair from Equity Real Estate, and we're talking about short sales and the process of dealing with that difficult procedure when you realize that you own a home that you can't afford and that you can't afford to sell. So let's talk about the options here. So when an individual comes to the realization that I just can't continue to make these payments anymore, what do they do next? What's their next step?
Well, first, the thing that we always tell them is call your bank, and see how willing they are to work with you on any option. Some banks are just not willing to do anything for you. So no matter how hard you try, they're just not willing to do anything.
Now, there's a couple of banks that have gotten a really bad reputation, and I kind of think deservedly so, for not representing truthfully what your options are. So you call the bank, and the bank says, oh, sure, just do this and it'll all work out fine, or no, we can't do anything. How much credence do you put into that first call? I mean, what do you do? And really, yeah, what do you do?
And it really depends. When it comes to keeping your home and staying in the home, then it's their say what they're willing to do or not do. But when it comes to selling your home and doing a short sale, they obviously, if you're not going to be able to stay in the home, they want to get rid of that, sell the asset and recover as much money as possible. So ultimately, if you're in a position where you're in default or are soon going to be in default and you're not going to be able to make your mortgage payments, then again, talk to your bank first. If they're not willing to work with you on options to stay in your home, such as a payment plan, sometimes they'll put you on a payment plan where you make smaller payments the first few months, and then they can tack all of the back interest
tack everything onto the end.
They can do a modification. And sometimes they'll do a short refinance, but that's very rare.
Pretty rare, especially right now where we have value going up. The tough part that I see people grappling with, that I really wish when they're dealing with this issue they need to be more realistic about, is that this is a very emotional process, but you have to take the emotion out of it.
Oh, yeah.
If you say, well, I need to stay in this house because I need to stay in this house because I've got all the kids' growth charts marked on the kitchen wall, and they stay in that home at the expense of tacking a bunch of interest onto the back, and their payment is still higher than a rent payment would be, but effectively all you're doing at that point is renting from the bank. Maybe they're getting into a situation that's not tenable. A lot of the modifications we're finding out that have been done in the last 3 years aren't sticking because people are getting modified to a different payment that they still can't afford. And so instead of just saying, okay, this is something that's not going to happen for me, I can't fix this problem and stay here in the home, and I need to move out, and just being a little bit more rational and reasonable about it, which is hard to do, I think we tend to kind of grab onto the emotional feature of our home as home, not realizing that you're going to move with your family and make a new home somewhere else, and being a renter is not a bad thing for a while if that's what you need to do, if the option is staying in a home that you still can't afford. How do you help people kind of deal with that emotional issue? Because I think that's a big piece of this decision-making process.
I think through education. I think that's a huge thing. And being a part of the short sale process, if they do indeed decide to go ahead and sell, being a part of that process is actually emotionally really helpful for them because they can understand what's going on. They can decide which offer they'd like to go ahead and have submitted to the bank. So they're making quite a few decisions alongside us because they are ultimately the sellers. And so it's nice because we can go ahead and educate them on all of their options. And if they're having a hard time getting some answers from the bank, even in terms of a modification, we're willing to help them at least talk with the bank and get some real answers ourselves, even if we need to go to upper management and people that we have contacts with. And so we can help people throughout the way. And so I think education is the most important thing.
And I like that idea. I really think with any financial decision, there's always the two pieces. You're making the emotional decision, you're making the financial decision. Just sometimes people can't get out of their own way. They just get stuck on this emotional decision, and they never get to the point of saying, this is how I feel about it, but this is what makes sense.
And also knowing timelines, that's really important.
Yeah.
So, someone might want to just try and keep their home, but then all of a sudden a notice of default has been filed. And then it's important for them to know, okay, once that notice of default has been filed, you have 3 months and 21 days, and then the bank can go ahead and potentially take the property to auction.
And just understanding the ins and outs, there are so many, again, moving parts of this process and this decision-making process. It is really hard to do on your own, and I think people shouldn't do it. Like with any big financial decision, turn to a trusted source, get somebody who can get education, get information, and then you can go and actually make an informed decision rather than just guessing and going off of what your neighbor's friend told you they went through, which might have nothing to do with you. One of the things I really love about what you guys do is these videos you've got on your website. Tell us about the videos that you've got available and what people could do if they want to get some of that education.
Absolutely. So what we've done is we've put together a video series with everything a homeowner would need to know in order to do a short sale. It actually talks a little bit about your options, outside of short sale. But then if you're interested in the short sale process, then it tells you everything about what to expect during the process, what paperwork you will need, your potential tax consequences, settlement of the debt. It'll talk basically about everything you need to know about a short sale. So if you would like to receive that video series, you can go to www.theshortsalemaster.com.
So theshortsalemaster.com, and then I noticed you've got a place where you can click on to download, and you can plug in, you said, either a phone number or an email, and then you'll reach out and get that information to them.
Exactly.
I really love that. I think if this is something that you're dealing with, or someone who's dealing with the possibility of having to go through some kind of a short sale foreclosure process, really, folks, go online and check this out. This is going to make a big difference to you and help you understand what you're doing, or help your friend or your neighbor, your family member understand what they're doing, just to have that information. It's just invaluable.
Mm-hmm.
There's so much information that gets applied here. It's impossible for someone who's not doing this day in and day out, I think, to really grasp all the stuff they've got to do. And if you try and do it on your own, you're going to spend 8 months beating your head against a wall and be so frustrated with the process, you'll just throw the towel in, and that's what I see people do. So let's talk about that a little bit. So situation, they're saying, okay, I can't afford to keep the home. I've got to sell it. I can't sell it for what I owe, but I certainly can't afford to pay a real estate agent because clearly, you don't have the money to sell the house. How are you going to pay the real estate agent to help you sell the house? How does that work, and what's the obligation of the seller? What's the benefit of dealing with an agent and going through a short sale?
So the nice thing about it is that if you do a short sale, the bank pays for all the real estate commissions, and that is for the buyer's agent, seller's agent, and that's all taken care of by the bank. The bank will also pay for your title fees, your settlement costs. So literally, you can do a short sale without any money down. Sometimes, depending on your particular scenario, you may still need to pay your water bill.
Whatever outstanding obligations might be there.
Exactly. But most of the time, you can do a short sale without paying a dime.
And that's a big deal. I mean, if you can, basically what you're saying then is you're dealing with a short sale, you're going to get free professional assistance if you're willing to take it.
And if they happen to have an FHA-backed short sale, there's actually a seller incentive of up to $3,000 that a seller can get if they do indeed sell their home as a short sale.
So instead of going through a foreclosure, they go through the process of short selling. There might be some financial benefit there.
Correct.
Saying. How do they find out if they qualify for that?
They can go ahead and call us.
Okay.
And at 801-688-4539.
Perfect. 688-4539. And you can look that up and see, okay, would you qualify for this program? Is there a seller incentive available?
Absolutely. We'll take a look at their full scenario, and we'll give them all the advice that they need.
So that if they are going to go through the process, because really the alternative to a short sale, and there's a couple. I mean, there's deed in lieu, and then there's just walking away and letting the bank go through the foreclosure. What's the advantages or disadvantages of those three?
A deed in lieu is basically an amicable foreclosure. So what happens is, instead of the bank going through the lengthy foreclosure process and looking at offers, you give them the keys to your home, and then in exchange, oftentimes they give you some money, probably $1,000 to $3,000. But it's a great benefit to them, but it's not a great benefit to you because it reports into your credit as a foreclosure. So essentially, it's the same as a foreclosure. It's just
faster.
Yeah.
So the reason why someone might want to do a deed in lieu, right? So I mean, if you're going to just say, okay, this house is going to go to foreclosure and I'm done with it, you basically have two choices: live in the home until the bank comes and tells you have to move out, or move out of the house and just let the bank deal with it, and they're going to come in and do what they're going to do, and you're going to get a lot of nasty grams in the mail until it's all said and done. What do you typically see that time frame to be from when someone stops making their payment until a foreclosure actually occurs? And I'm sure it depends on the bank. What would you typically say that you would suggest people expect?
Well, once they miss a payment, the bank can file a notice of default, and the notice of default is when the foreclosure process actually begins.
Is that 90 days after?
So that's 90 days.
You got to be 91 days late. The bank files a notice of default.
They can file a notice of default. They don't always do that, but that's the soonest that they can file the notice of default. So the notice of default is essentially when the foreclosure process starts, and then from there, the homeowner still has 3 months and 21 days before the bank could even take the property to auction.
Gotcha. So, and then once they've got to post a notice of when the auction is going to be, and then they do the auction. So really, there's a 6-month window if you're going to go down the foreclosure, a minimum of 6 months that this is going to take.
6 months and 21 days, and it's the 21 days because they do need to post that.
So really, we're looking at a 7-month process, assuming that the bank moves forward quickly. How often do you see the banks right now in this market actually moving that quickly?
If your lender is a local credit union or a smaller bank, they have a smaller portfolio of loans, so they're pretty much on top of their loans.
Gotcha.
But if you have a larger bank like Bank of America is really known
America's Servicer, Cenlar, one of these big servicing companies, whatever it may be,
then they typically take a lot longer. We've seen people stay in their homes for a year, 2 years, some even 3, but those are really rare cases because they've tried to
probably
work
becoming
things out
more
with
so
them.
now. I mean, are you finding that banks are getting a little bit more proactive about that time frame right now?
Yeah, because the number of foreclosures have decreased, so they have more time on their hands to reach out to people.
So if you're in a situation where you're saying, listen, I don't want this to drag on forever, and the thing that you've got to realize is as long as that home is still there, it doesn't matter if you've moved out of it or if the bank sent you notices until the foreclosure is done, it's still killing your credit, which may be the least of your worries, but at some point that's going to become important again, and it's going to create problems for you down the road. So if you're just saying, listen, I just want to be done with this, I don't want to have this dragging over my head, then instead of the foreclosure, you might pursue a deed in lieu, right?
Yes.
What does a bank look for when a deed in lieu? And a deed in lieu just means that the bank is going to take back the property in lieu of you making the payments on the mortgage. So what do you see as a time frame there, and what's the decision-making process for the bank when they're saying, do we do this or not?
Typically, that would take about 30 days, sometimes even less, again, because the number of people that qualify for a deed in lieu. To be able to do a deed in lieu, you only have to have one lien against your property, so only one mortgage.
Gotcha.
You can't have any other loans or liens against the property.
Okay.
So that kind of limits the number of people that can qualify for that program.
Are some banks more willing to do a deed in lieu than others in your experience?
I think the majority are. I mean, anybody would take a deed in lieu anytime. They want to save money on the foreclosure. So ideally, the banks first want to do a short sale. If you cannot make your payments, they want to short the home. If you're not willing to go through the short sale process, or if you were unable to receive an offer, then they want to do a deed in lieu.
Deed in lieu. Okay. All right. Well, if you've got a question about your situation, give us a call, 801-254-5855. We'll be right back after the break. Stay tuned. Welcome back to When Wall Street Meets Main Street. So talking about the short sale process and why one would consider that versus some other alternative, the deed in lieu or the foreclosure. So what's the advantage to an individual of going through a short? I mean, clearly a short sale is going to be more time-consuming for the seller. You've got to provide some information. There's a set of documentation they're going to have to get. They've got to show hardship, and they're going to be involved in the process for several months. I mean, maybe 6, 12 months to get a short sale done?
For us, it's normally on average from start to finish, so that's when the full package has been submitted to the bank, and then for the buyer to actually close on the home, even with a 30-day closing period for the buyer, 3 to 4 months.
Really?
Now,
that's remarkably shorter than the typical market time.
It is. The typical market time on average is around 8 to 12 months.
What do you think is making the difference for your experience and what you're doing? What are you doing different than what's being done typically? Because really, I'm finding if somebody's writing a short sale offer on a buyer's side, and that's where I see it more as the buyers, they're going to be sitting waiting for 6, 8 months to get that done. And meanwhile, interest rates change and their families or their situation changes, and it's just a big, long waiting game. What are you doing to get that time cut in half?
We have everything pretty much systematized, which is really nice.
Okay.
And then also all of our clients basically get a 2-for-1. They get 2 agents working for them full time. One that is negotiating the file and simultaneously another that's actually working on marketing the property and collecting additional offers for them.
So you kind of double. You can just basically shave the time in half.
Correct.
Well, it's interesting. When you're dealing with real estate agents, the reality is if you're going to sell your home, you're going to buy a home, and you're going to have an agent involved, you're going to pay the exact same amount of money to someone with no experience, no expertise, and no background as you will to the most experienced and knowledgeable real estate agent on the planet, because you all charge exactly the same. I mean, the fee is the same. And I talk to people sometimes, I'm going to have to deal with a short sale, or I've got to do this, or I've got to sell my home or buy my home. And their go-to agent is whoever was referred to them by their neighbor or their cousin or their brother-in-law, or maybe they have a real estate license that they just haven't activated, so they're going to turn that on again. And having a license is no guarantee of knowledge. My experience is, and I'm not a realtor, nor will I ever be, because I'd be terrible at it. I can't find my way out of a paper bag. I couldn't show a house any more than I could flap my arms and fly to the moon. So, but going to real estate school, basically you learn how to stay out of jail, right? Like write a contract and hopefully not go to jail. Is that pretty much the extent of it?
Pretty much.
So getting your risk is not going to be the thing that's going to tell you how to deal a short sale. And just because somebody has a real estate license doesn't mean they know how to deal with this process. So if you want to get a shorter process, get the right agent is what you're saying.
Yeah, and it really comes down to expertise. How many short sales has that agent that you're going to have representing you has closed?
Yeah.
And what contacts do they have? Like, do they know the ins and outs of the game? Because every scenario can be really different, and you need to have somebody prepared to deal with anything that may come
That is a
way.
great interview question, and we have experts come on this show from time to time, and I know that we've got great listeners, and hopefully you'll hear from some of them that'll call. But my strong advice to anyone is it doesn't matter where you got the connection. If you heard them on a radio show, if you met them on the street, if they're your friend or your neighbor, you're going to hire someone to perform a financial service for you. You better be interviewing them and asking them what's your level of expertise. And I like that. How many of these have you done? Because the short sale process is dramatically different from any other type of real estate transaction. So let's go back. What's the benefit to somebody of dealing with this process of a short sale versus just saying, bank, I'm out of here, take the house when you want it?
Right. And it really comes down to, your credit is shot already if you're missing your payments, right? Yeah. So we talked about how soon you can get the short sale done, and that can be minimized if you're working with an expert. And then when you do a short sale, it reports on your credit as paid in full for less than full. Whereas if you did a deed in lieu or a foreclosure, it shows up as a foreclosure. And so what that translates into is higher interest rates, even on your current credit cards, your insurance, any type of...
any financial transaction gets more expensive for the next 7 years when you've got a foreclosure.
Exactly.
And you might not be able to do a financial transaction. You got a foreclosure, you're 7 years out from buying a house.
Correct. And also when you do... some people look at it, some people have filed bankruptcy and are looking at, should I do a short sale or should I do a foreclosure? Because once you file bankruptcy and all of your debt has been discharged to the bankruptcy, you don't have a financial implication in terms of financial obligation to pay the bank back. So some people think, I'll just walk away. But your financial situation may look terrible right now because you're behind on many things. You may have a bankruptcy on your credit. But what about a few years down the road when you want to purchase a home again, when you want to purchase investment properties?
Or buy a car.
Exactly.
Or like you said, get insurance anymore. I mean, that's going to be a credit score driven transaction.
Yeah. So the bank, prospective lenders will look at it when they look at a foreclosure is, okay, life happened, something happened to you, but you just walked away.
Yeah.
Whereas when they look at a short sale, okay, life happened to you, you lost your job, whatever happened, but you did something about it. You did the right thing. You tried selling your home.
Did the preferential thing. So, and then you also mentioned before some incentive that's available to sellers of short sale. Tell me about what types of incentives you see from banks or from agencies right now going to those who are willing to go through the short sale process rather than just walking away from a property.
So it's interesting, going back to loans that are backed by FHA. If someone is pre-approved for a short sale and they have a loan that's backed by FHA, even if for some reason they can't sell that home as a short sale, maybe because they didn't receive an offer that was high enough for the bank to accept, they're still not obligated for the difference because they were approved for the short sale. So that's if the loan was backed by FHA. So that in itself is a nice incentive.
Just having gotten that approval.
Yeah, it might not be monetary.
Gets you off the hook.
Immediately, but it gets you off the hook in terms of owing the difference.
And then there are some banks and some programs where they're literally going to write you out a check if you'll deal with the short sale process for them. Is that correct?
Yeah, the majority, they can range anywhere from $1,000 to $3,000, but we're seeing $3,000 on a consistent basis, and that's more likely on an owner-occupied home. So
which is great because that's your rent for the next 2 months, or that's your deposit, and get caught up on the water bill or whatever it might be.
That's exactly. It's called a relocation assistance or incentive.
That's great. Yeah. So one thing that you mentioned, Alisa, that I think we got to talk about a little bit is, if you go through the short sale or the foreclosure process, you're going to end up with some amount of money that the bank was owed that they didn't get. What's going to happen to that deficit?
So the nice thing about a short sale, especially if you're working with an expert that has contacts within the bank and can go to bat for you, is that you can basically work on negotiating away the difference and hopefully work on negotiating a full settlement, which would mean that you wouldn't be responsible for the difference after moving forward.
Now, by default, when that short sale is done, if it's not stated in there clearly what happens to the deficit, can that come back to bite you?
Yes, there is potential that they could come back and file a judgment. They now need to file a judgment, and they have 90 days to do that.
Okay. Now, do they have to prove fraud in the inception of the loan, or what's the hurdle for someone to go and get a deficiency judgment on a short sale or a foreclosure right now?
Oh, well, on a short, it just like whether it's a short sale or a foreclosure, the fact is if you took out a loan for $100,000 and you sold the property for $50,000 and there's a $50,000 gap,
you owe them $50,000.
You owe them $50,000. It doesn't matter if there was fraud or no fraud, you still owe them the $50,000. So the benefit of doing a short sale is that if you can get an approval letter that shows that that $50,000 is forgiven, then you have something in writing, so the bank can't come after you.
It clears that off rather than the foreclosure where they could for 90 days come and file a lawsuit. And, particularly you mentioned, if you're dealing with individuals, and I've had clients recently where they have a substantial income, maybe even they have some substantial retirement assets, but they've realized the house is underwater, they're struggling to make a payment on a home that they're never going to catch up on again, and they just say, this doesn't make sense for us financially anymore, we're going to go pursue some other alternative, and, foreclosure or short sale or deed in lieu or one of those. So in those types of a situation, where do you recommend people go? I mean, is that a situation where they're going to qualify for a short sale? Or is a bank going to look and say, okay, you've got money in the bank, we won't approve a short sale?
Oh, okay. So, yeah, when a homeowner has visible assets, like a lot of money in the bank, other homes that the bank can track down. Now, just keep in mind, when you do a short sale, when you're applying for a short sale, all the information you give them is voluntary. So if they're going to require you to send in your bank statement. So if your bank statements show a lot of money in there, they may either decline the short sale altogether if your net worth is really high. Sometimes, even if you don't have a lot of money, but you do have your life savings in your bank account, they may accept the short sale, but ask for a cash contribution or a promissory note.
So where I've seen that be an issue is, if somebody's self-employed, they haven't really done a good job managing their bank accounts, and they've got all of their business assets sitting in their personal bank account, and they provide that information, and now the bank has all this big asset statement, but it's their operational funds to keep their business running, but the bank sees that and says, hey, I want a piece of that. So what do you recommend people do in that kind of a situation?
Well, I think that's why it's important to contact an expert in the beginning just to see what your options are and talk through your scenario with someone, because our goal is to be able to package the deal correctly for them based upon what their scenario is. And maybe, ultimately, our goal is to let them know, okay, if you're going to go ahead and apply for a modification, know that the information that you send into them could very well come back to you. So if you're trying to say, you're trying to talk yourself up and
show how great you are, and I can afford this payment.
Exactly, when in reality, maybe that isn't the case, and you could very well be in a short sale situation sooner than later. Then you might just want to talk to someone and see what your options are and what might be best for you.
So really,
in the
the
long
time
run.
to get somebody involved here is as soon as you know I'm not going to be able to continue to make this payment. That's when you go and you get a third party involved.
It's nice when people come to us prior to the notice of default being filed. So prior to that 90 days of when it can potentially be filed.
And you make a really good point, because I think that we want to hang on, and people tend to want to keep their homes, do the thing that they've committed to do, which is make the mortgage payment, and look for those glimmers of hope and the possibility that they might be there, and that emotional draw of saying I need to keep this house. And so the communication, I think, that happens early on with the bank is, okay, I can't make this payment, but I've got all these good things going on, and it's going to all come together soon. And like you said, if that's not really the case, you've just really put yourself in a bad situation as far as being able to get the bank to approve the next step if that's what you have to go to.
Exactly.
And it's not always, super detrimental. Again, it depends on how large your bank is, and if you're dealing with the same person that has seen your financials for the modification to do a short sale, they know exactly, hey, a few months ago you said you made X amount of money and you had all this money, and then now you're doing a short sale and you don't. So, but the bank will ask for your 2 most recent bank statements and 2 most recent pay stubs. So if there's a big gap between the time where you try to do the modification and you can substantiate that your financial situation has changed in the last 3-6 months or whatever it is, then you're going to be okay.
So other documentation people need to think about putting together. I mean, getting a short sale approved is almost as intensive as getting a mortgage approved, because you've got to document it. Yeah, if not more. So what are the kind of documentation that people need to be ready to provide when they are starting to look at that as an alternative?
So in addition to the bank statements and the pay stubs for the past 2 months, the bank will normally ask for tax returns from the past 2 years,
okay,
a breakdown of their monthly expenses, a breakdown of their assets, and then a hardship letter, which will explain the reason why they're in this situation.
All right, well, let's talk about that hardship letter when we come back. Stay tuned here to K-Talk. We'll be right back after the break. Welcome back to Wall Street Meets Main Street. We're talking about the short sale process here today with Paola and Alisa from Equity Real Estate. And you guys gave a website out earlier, and I'd really recommend that if this is something that is of concern to you, or you've got a family member or a friend that's dealing with the prospect of having to go through a short sale or is in the process of dealing with it right now, go to their website. It is theshortsalemaster.com, and there's a free video series that really would be extremely beneficial. I'd highly recommend that. That's something you ought to look into. Even if you're looking to buy with a short sale, it'd probably still be beneficial to understand what's going on the other side of it. So before the break, you mentioned that there's some documentation that has to be provided, and to be fair, I mean, it's not like you're having to break into Fort Knox and dig out the documentation library. This is your tax returns, your bank statements, your pay stubs, so things that you're probably going to have access to without an awful lot of digging. And then on top of that, you mentioned a hardship letter. So what is this hardship letter, and what are banks looking for to say, okay, you're deserving of a short sale approval or you're not?
So a hardship letter can actually just be a few sentences long. It doesn't have to be lengthy by any means. And basically banks, they feel that a hardship can be based upon divorce, death, illness, maybe if someone has filed for bankruptcy, then a loss of job, or potentially even relocation.
Yeah, and touching upon relocation, sometimes we get a lot of military personnel.
Okay.
So the banks actually, some banks, larger banks, have special departments set up for military personnel, and there's special programs, and so they do really get preferential.
Now, does that require that there be a VA loan in play, or is
no?
it?
They
This is just
have to.
You're a member of the military. You've gotten orders sending you somewhere else, and you've got a house you can't sell.
Yes. So some banks will verify that you're on active deployment. Some won't, but
Okay.
just the fact that you are
You're a member of the military. There's some potential avenues that might ease the process.
Yeah. So
Okay.
the short
I
sale
didn't know that.
process is faster for you, and you get preferential treatment. In
Okay.
fact, when you're an active military service member, and even if you're behind on your payments, the bank cannot foreclose of you for the duration of your deployment. So if you're
Military
deployed for 2 years,
leave
then
act,
the
yep.
bank cannot foreclose on you.
Which is useful to know. And again, I mean, just another example of the myriad pieces of information that you need to understand, and why really this is not a do-it-yourself project. And from the beginning, don't start on this process without getting the right information in to start with. So on this letter that you've got to provide to show what the hardship is that's created the situation for the short sale, really we're just saying the bank wants to know what is it that's changed your finances from when you agreed to pay this loan, when you got it, to where you're at right now. Mm-hmm. And there's got to be some tangible reason for that occurrence.
And it's important for you not to list anything. So, for example, we had a real estate developer. I'm just going to give an example of a client of ours who did a 3-page letter talking about his real estate developments and how now the real estate market has gone down, but at some point he hopes to come back.
Yeah.
And you do not want to talk yourself up. No, hardship letter.
This is a circumstance, much like when you're dealing with underwriters. I'm guessing that less is more here.
Exactly.
This is what happened. This was the problem, and that's the end of the story. And it's tough because we hate to make ourselves look bad, nobody wants to write a letter saying, yeah, I really screwed up, my bad, or, my life has really been rough the last few years. We always want to finish that on the Hollywood ending and say, but things are getting better.
Yeah, and one tip is to avoid mentioning the word investment in there. So if you're trying to do a short sale on a rental home or an investment home, do not mention the word investment.
You don't need to point that out to them.
Yes.
And probably you also don't need to point out the investments you have in other things.
Exactly.
And why this one's not working well, so you'd like to move on.
Exactly.
Okay. That's great advice. So if somebody can get that information together, that'd probably be a good tip before you start going down this road, just to have that ready.
Yeah, so we have, when people call in, if they do want to move forward with a short sale, then we go ahead and have them gather that information, send it over to us so we can review it, make sure that we feel that they would qualify for the short sale through the bank.
Okay.
And then we go ahead and take care of all of the paperwork in person.
That's a great service.
The additional paperwork.
You're going to kind of just look it over to begin with and say, is this likely or is this not likely, so that people don't waste the next 8 months of their life barking up the wrong tree.
Yeah, we don't want to waste anyone's time, and we want them to know what's available to them.
That's one of the biggest complaints I've heard from people over the last 3 years dealing with short sales is, we went back and forth and went the rounds and called customer service up and down the phone tree at, bank of whatever, and they told us, yeah, it's going to go, it'll happen, and then it never did, and we found out 8 months later that it was never going to get approved in the first place, but they just gave us the runaround. So you're going to help people, and a good professional should help people avoid that runaround.
Oh, right. And if we feel that they might qualify for a modification and that's the route they want to go, then we'll go ahead and assist them in the direction, in whom to call and all of that.
The other point you just made, and I don't even think you made it, was that you're going to fill out the paperwork for them. I've had people say, yeah, well, my real estate agent told me I need to fill this paperwork out and send it in. If your realtor is telling you to fill out paperwork related to a real estate transaction, you've got the wrong realtor. I mean, that's, in my mind, pretty straightforward. You shouldn't be filling out contracts and applications as an individual if you have a real estate agent representing. Is that a safe statement to make?
Yeah, we'll work together at the listing appointment, and we'll make sure that everything is filled out properly for them, and that everything is signed that can be signed up front. We know what the banks are going to ask for since we work with multiple banks, so we have all that information up front. If you're working with someone that doesn't have that expertise, then you're going to be filling out forms and signing things all along the way, whereas we try to get everything that we can up front.
Really what you're saying is the big concerns that people have going into the short sale process can be resolved by working with the right professional.
Exactly.
So let's flip around to the other side here. We just have a couple of minutes. If you're looking to buy a home and you're interested in getting a short sale, what's the advantage of going the route of buying a home that's on a short sale versus just going out and buying a home that's not?
Well, in this market, because we are in an appreciating market, you can actually get some great deals when buying a short sale. Now, you have to keep in mind, what is your timeline? Because if you're rushed to buy a property, a short sale may not be the right property for you. So if you have time and can look around, then you can get a great deal. Now, one of the things is that you're highly recommended, it's almost a must-do, is a home inspection. Because short sale properties can oftentimes even if they're occupied, the people that are living in the property don't have money to make repairs or even just the normal routine maintenance.
Or they just haven't bothered or cared to do it.
Exactly. So there's a lot of deferred maintenance, or the homes may have been vacant for a year. And again, a lot of deferred maintenance. So in your home inspection, make sure to add up how much it would cost you to complete all those repairs, because the bank will not repair anything. It truly is an assets transaction. So if you add up all the repairs, you may still be getting a fantastic deal.
That's a great point, but really you got to look at it and say it's not just the purchase price that you're getting into, it's the purchase price and the roof repair and the kitchen issues and the paint on the outside and the inside and the new carpet and all the stuff that wasn't done over the last 2 years that on a home that's not in a short sale you might not have to deal with, plus you don't have to deal with the time.
Yeah, and we've seen that in homes of, I would say, upwards of 250, homeowners tend to maintain their homes a lot better, so you can walk into a home that's in pristine condition.
And really get a great deal. Awesome. Well, hey, I really appreciate you two coming on. Again, your website, theshortsalemaster.com. I highly recommend going on there. Even if you're looking to buy a home and you want to understand what's going on with this process, this is a great resource for people. Really, go check this out, theshortsalemaster.com. And then if they'd like to reach out to you, give us your phone numbers one more time.
801-688-4539.
688-4539. Well, thank you both for coming on today. I learned a lot of information, which is always good. That's a good sign.
Thank you, Alan.
Thank you.
Thank you. Well, stick around. We've got a great show coming up for you next with Tim Alders. Make good decisions this week. Think about what you're doing with your money before you start doing it. If you are in a situation where your finances just aren't covering your needs and your real estate is in jeopardy, and you're thinking you're going to have to go through some type of a short sale, don't do this on your own. There's no incentive to do it on your own. You're not saving money. You're probably just creating more headache and more hassle for yourself. Stay tuned. We'll see you back next week.